In this presentation, we will take a look at part 4 of our C Corporation comprehensive problem, this time entering the beginning balances into our tax return into our 1120. Here is our form 1120. We're now going to be considering those beginning balances. Now recall that when we think about the beginning balances, if this were a continuing client, we would be having the beginning balances entered in the ending balances in the prior year. When we rolled it then forward, those beginning balance would populate in the current time period. So we're going to enter the beginning balances, and once we then do so, we'll kind of be at that point where you would expect to be if you were doing a continuing client that you had done in the prior year. If you were doing a new client that was that had entered their data in the prior year, but not in this tax software, then typically we would still like to put our information into the prior year and then roll it forward if possible. If not, we'll do it as we're doing here and simply enter the prior year data into the current year tax return. So mainly we're going to be concentrating then on the final page, that being page 6. That's where we have the Schedule L. The Schedule L having the balance sheet, that balance sheet of the beginning balance and ending balance. Our major concern down here, the most difficult part as we enter this, is going to be with the rolling forward of the retained earnings. We want to enter the retained earnings. It needs to be correct because we want the system then to calculate the ending retained earnings, and therefore we have to have the beginning retained earnings correct. And then if it calculates the ending retained earnings correct, then we have some verification. We feel good. Something's in balance. We're ready to go. We're rocking and rolling then. So I'm going to go back over to our Excel sheet then. We're going to scroll up. We had our information over here. So we're concentrating in on the prior year balances at this point in time. And then we'll go to the current year. So I'm going to go ahead and hide the current year information because we're going to be entering the prior year balances. So I'm going to go to D, highlight from D, or select from D to E, let go, right click that selected area and hide them. Don't delete them, hide them. And then we're going to enter our beginning balances into our balance sheet, starting with cash. Back to our tax return, we're at cash at the 534,387. So I'm going to go back to the detail in the tax return. We're going to go into the data input, and we want to look at the balance sheet, and we're looking at the balance sheet. Up top, we're going to be entering the beginning balance numbers. You can enter this directly into the form if you so choose. Obviously, we're going to be using the data input as would typically be done in a firm. So we're going to say, all right, cash is going to be the 534,387. Then I'm going to go back over here. Now, you might want to like highlight these as you go, mark them off. If you got a highlighter, you can mark them off. You don't want to mark it up too much because you might have to go back and double check with a different color or something if something's off or something like that. Then we've got the accounts receivable. Going back over, obviously, if it's in the software, you can highlight as many times as you want and then delete the highlights, which is nice. So the accounts receivable we're going to have then is going to be the 550,000. We're going to go back over and select that one. Also note that when you're working at CPA firms, you might have older partners that may even not be great on the computer, and they may not know, that a lot of people may not use colors and whatnot to highlight things out. It might be something that's not thought as professional in some firms, but it's probably getting more professional now these days. Highlighting using the colors in Excel, I have found to be very useful. It really helps your eyes not to wander. So if you can put that in place, I recommend doing so. Allowance for doubtful accounts. So then we're going to go to our allowance for doubtful accounts. That's going to be for the 25,000. Going to go back over it. Now, obviously, you might think, should I put a negative there or not? And you'd have to, it depends on the software. Typically, in this software, I know I put a positive there. It's still going to be a contra asset account when it rolls over to the first page. In other words, if I was to go to the forms, not the first page, but the sixth page, it will then populate in that format. Now, note, it's not showing the balance sheet right now because sometimes it could be possible if the balance sheet is not required to be seen unless certain conditions are met. Typically, I will then go in and force the balance sheet to be in place with an override, and then I will unoverride in case we don't need it. Now, note there's debate as to whether giving the Schedule L would be beneficial, even if you don't need it. And one side would say, hey, why would you give the Schedule L if they're not asking for it? Don't give the IRS any more information than they need. And the other side would say, hey, if the Schedule L is balancing out, then it may answer some questions in case of an audit preemptively without having to go into the audit. So, but in any case, general rule, we don't add in more information than is asked for the tax preparation purpose. But here I'd like to see it as I build it. So I'm going to go into the miscellaneous and I'm going to try to override the system to say, hey, show the balance sheet for me because I want to look at it as I start working through the problem. So we're going to select this item where it says balance sheet M1, M2. We're going to force that, meaning we're going to override anytime within Lacert software. If you see this little O, we're going to override it. So most of the time you don't want to use something with an override when you don't need to. We're going to use them strategically to help us to format the return. So we're going to override here. I'm going to say, please let me see the balance sheet as I construct it. There we go. Now, when we go here, notice it put the allowance basically as a negative number, or it did a subtraction problem to bring out the net amount for the receivables. So whenever you have a negative or a credit or something like that, you have to determine how are you going to put it into the system. Should it be a positive or negative? And the data input side, how's that going to transfer over into the forms? Okay, so we're going to go back down here and see what we have next. So we've done the allowance. We're now moving to the inventory. So we're looking for the inventory. So that's going to be here. That is at the 1,440,000. Next we have the, and if I make a data entry error, note that I'm gonna keep it there, and then I'm gonna check the balances as we go. So if I make a data entry error, you say, hey, there's a number missing, then I'll pick it up and you'll be able to see how I basically check it out so we can tie it out in the future. So we're gonna go to the tax exempt bonds, and so I'm gonna go tax exempt securities, and that was for 195,000. Next we have the investments, so investments in stock. So that's going to be, I'm going to put that in the other. So I'm going to go down here. I'm just going to simply call it investments. And that one's going to be for 250,000. Then I'm going to say okay. Next we have the, I'm going to highlight that because we've done it. We have the property, plant, and equipment. So we're going to go back over to the property, the plant, and the equipment. And we're going to be picking up now. We have a little asterisk here, which is kind of like an override. It's going to be a similar kind of process. What we're going to do is we're going to put the beginning balances in. Then we're going to let the system calculate at some point the ending balances, because we would be getting the beginning balances from the prior year return. And then we're going to enter them into the system, but they should be supported by depreciation schedules, which is one of the more complex components of entering the tax return. So we're going to have to deal with the depreciation schedules. We're going to do that later. What I want to do now is put the number in and then be able to push forward. I want to be in balance first and then go to the depreciation schedules and then figure out that component within the context of being in balance. So I'm gonna force it first, and then when I remove the overrides, or when it's time to remove the overrides, we will then do so. We then have the accumulated depreciation. Again, this is a contra asset account. It's represented as a negative here. When you go into the system, you got to say, okay, do they want a negative number or a positive number here? I'm going to assume it's a positive number, 289,387. Let's see if that is indeed the case. It should be subtracting these out when we go to the tax forms. Let's go to the tax forms and see if that's what happens. We have this number, it's subtracting this one out to get to this number here. So you just got to know, which way do they want? Do they want a negative number for the negative asset or the contra asset or not? Then we're going to go back to our forms, or actually, back to the forms, and we have this one's done, and we've got land now. Let's pick up the land. That's going to be down here. That's going to be for the 600,000. 600,000, is that it? Let's see if that's the last one. I'm going to go back down. Land has been picked up, which is nice. Oh, we have other assets. Then we have to pick up the other assets. I'm not done quite yet. I jumped to the tax return a little too soon. We're going to go down here and we're going to call this other assets, other. And that's going to be for the amount of the 150,000. 150. Typically then I will check as we go. I'll say, oh, those are total assets. Let's see if we input that properly. Let's go to the forms and see what the total assets add up to and see if that ties out to what we have in our Excel sheet. So we have the 5,105,000, 5,105,000. Is that what we have over here? It is indeed. Now this portion should be one of the easier components to fill out. If we override the assets and the accumulated depreciation, there's nothing that should really throw us off. So if this is off, we can check the two components, this component, and then this component, and then the total. But we should be able to get to a point where this is done, and I'm verified. I feel pretty confident at that point. Then we're going to go to the liabilities. So now we're down here in the liabilities section. So I'm going to go back over, and we're going to be picking up the liabilities, starting with the accounts payable. Accounts payable has the 350,000 in it, so 350,000 on the accounts payable. Back to Excel, we're going to highlight that, saying that one has been completed. Then we have the other current liabilities. Other current liabilities, I'm going to put that in the other liabilities section. Just call it other, I suppose, is sufficient. And that was for the 135,000, 135,000, 135,000. And then we're going to go back over. I'm going to make that green because we have then picked that one up. Now we're on the long-term liabilities, notes payable. So I'm going to look for the notes payable here. So we have the loans to shareholder mortgage and notes. Let's put it there. And that's going to be for 700,000. So 700,000. And I'm going to make that green. And note, in practice too, you would probably want this site. It'd be great to have two screens if you had something like this, to have, you know, the data on one screen and the input on the other screen. So, and then, or you can print the thing out, obviously, and that's easy too. So we're going to have the other liabilities then. It's going to be here. I'm just going to simply call it other again. Other. And we will set that up at the 250, or input it at the 250, because that's what we have in our data. And so we'll make that green. Then we're down here on, so that should be the liabilities. So the liabilities then should be at the 1,435,000. We can kind of check that number and say, the liabilities tie out down here, 1,435,000. So we'd have to 1,435,000 because we haven't put in the capital or equity section yet. So that looks good. I'm pretty confident there. Equity is usually the more confusing component, but because it's the beginning balances, we're going to be kind of forcing those as well. So we're going to say the capital count is going to be the 500,000. So we're up here in, or down here, or somewhere along here in the capital. And common stock 500,000, not 50, 500. There we go. And then we're going to kind of force the retained earnings down here because, again, it's the beginning balance. So beginning balance retained earning 3170. 31, that's not what I was wanting to happen. So it's going to be 3170,000. There we have that. Now let's check if we are in balance in our beginning balances. We're going to go back over here. We've got the 5,105,000 and the 5,105,000. So we're good on the beginning balances. Now we could move forward to the ending balances, but just note that by the time we get down to the retained earnings, we're going to basically double check the retained earnings, but we want the system to kind of calculate the retained earnings, which it will do so with the book value and the dividends that will be input into the system. So note that this got calculated for us in the ending balance. But it's wrong right now because we don't have any other information in there. And what else calculated for us? This building, the property, plant, and equipment, and accumulated depreciation. Those are things that the system will typically calculate for us with the depreciation. This one with the depreciation schedules. So if we were a continuing client, if we were rolling this forward from the prior year, the beginning numbers would already roll forward. Our retained earnings is what it is. It is what it has to be. And the book retained earnings would hopefully have to tie out to it. If it doesn't, we're gonna have to see some problem with the books, with the bookkeeping, because this has to be our beginning number for the tax purposes, because it's in the tax return, right? So that's going to be our beginning number. It ties forward. It's got to tie out to the prior year ending retained earnings number. And if there's a problem, and this is on a book basis, or it should be, right? It should be the book basis of the balance sheet on a book basis. If there's something different in the books that you're getting from a client or something like that, it's probably because something got entered into a prior year, and you'll have to basically make the reconciliation for that difference. What happened, what got entered into the prior year into basically rolling into retained earnings, the prior year income statement. So, and then up top, we have the depreciation. So the depreciation is going to roll forward by the depreciation schedule. So what we're going to do next is we're going to enter the depreciation schedule, and that depreciation schedule should support these two numbers, and it should help us to calculate then the ending numbers. And that's typically what we will have kind of at our starting point. The starting point when we start a new return will also have the depreciation schedules from the prior year. But that's kind of a problem in some ways, because when we do our step-by-step system, the depreciation schedules will already be in there, and they're already going to be putting numbers in there which may or may not be correct, because there may not be increases, purchases, or sales included in the depreciation schedules. So what we want to do is think about, okay, how can we do this in a step-by-step system when the depreciation schedules are already in there, and basically be able to do it one piece at a time, even though we already have some information that's kind of generated from the software. The software is trying to help us, but they're getting ahead of itself as we go through our process. So we'll talk about that next time. Next time we'll enter the depreciation schedules that we would assume to be getting from the client from the prior year, and they should tie out to these items here, and they'll calculate some depreciation into the future. It'll calculate depreciation, but it may not be right. It won't be right in this case because we won't have the sale in place. There'll be an asset that was sold, and then we'll continue to go on to the depreciation next time.